PantheonAI presents Trump's 50% EU tariff threat, iPhone tax, Bitcoin dips, and market momentum. Good morning, everyone. It's May 23, 2025, and this is your PAI Morning Briefing. I'm Host A from PantheonAI, and I hope you're ready to navigate another exciting day in the markets.
And I'm Host B. We're really diving deep today, aren't we? Into finance, tech, global trade, and, of course, that wild crypto action that's definitely keeping us all on our toes.
Absolutely. Let's kick things off with a quick market check. The S&P 500 is sitting around 5,794 with a modest uptick of about 0.21%. A nice little nudge to start the day, wouldn't you say?
Yeah, definitely. And over in the Dow, we're seeing it at about 41,565, up just under 0.1%. But the Nasdaq, that's holding strong at roughly 18,723, gaining a little over 0.5%. So optimism in our tech heavyweights, it seems.
Right. And the Russell 2000 is climbing by almost a full percentage point, nearing 2033. But then you look at the crypto corner. Bitcoin's showing a bit of melancholy, isn't it? Around 108,669, registering a decline of about 2.7%.
Yeah, and Ethereum isn't far behind, trading around 2560 with a drop of nearly 4%. Classic crypto volatility, as always, keeping our risk appetites in check, while traditional equities seem to be holding a steady course.
It really is. But speaking of things that are definitely shaking things up, let's transition into our deep dive on today's major market trends. First up, tariff tensions are resurfacing in a big way. President Donald Trump has made headlines yet again.
Oh, the tariff tantrums are definitely back. He's announced a potential 50% tariff targeting the European Union, effective by June 1st. I mean, that's a bold move, stirring up concerns about trade disruptions and potential price hikes for consumers and businesses alike.
Exactly. The market's really trying to balance geopolitical risk with domestic economic growth right now. And with Trump's previous forays into tariff politics, investors are certainly taking note, especially those with exposures in international trade.
And it's not just the EU, is it? We can't talk about tariffs without mentioning Apple. Trump's putting the tech giant under the microscope, too. Repeated reports suggest he might impose a 25% tariff on any iPhone sold in the U.S. if it isn't manufactured domestically.
Wow. That not only rattles supply chains, but can seriously affect consumer prices. At a time when we're all just trying to make sense of our monthly budgets, let alone multinational corporations. But, while traditional markets are absorbing these threats, there's another development stirring interest. The rally in Bitcoin.
Yeah, despite the recent crypto volatility, Bitcoin's been flirting with record levels. Many analysts are saying it could have implications for the broader financial landscape. It's a big question, isn't it? Is this surge just speculation? Or are we seeing a structural shift where digital assets are increasingly viewed as a hedge against traditional market uncertainties?
It's fascinating. And that naturally brings us into our comprehensive coverage of today's top stories. We've got several narratives unfolding. First, those Trump tariff tantrums. He's declared an intent to impose a 50% tariff on European imports, effective June 1st, and he's not stopping there. Additional measures aimed at big names like Apple.
Right, so if you're in the market for European luxury goods or tech gadgets, brace yourself for a bumpy ride. The repeated emphasis on this across multiple reports really underscores how seriously these threats are being taken. Some of my colleagues are even saying, if tariffs were a sport, Trump would be going for the gold medal.
Haha, I love that. And speaking of tech gadgets, question number 2, is now a good time to buy an iPhone? That potential 25% tariff on non-domestically assembled iPhones could mean serious sticker shock. It's a classic conundrum. Upgrade now, or stick with what you have until the dust settles?
Yeah, it's like your phone is telling you, I'm flawless now, but tomorrow could be a whole different app story. But here's a bittersweet headline. Trump's new tariff threats slam the market, but our newest stock hits an all-time high. It really reminds you of the market's unpredictable nature, doesn't it?
It really does. Vulnerability in one segment often coincides with strength in another. It also prompts a deeper discussion about how some companies perform exceptionally well even when the broader landscape is disrupted. And then, why Bitcoin rallied to a 112,000 record high while stocks are wobbling.
Yes, you heard that right. Despite modest gains in traditional indices, Bitcoin's rally has been dramatic, even if brief. It's sparking debates. Are we witnessing a realignment in investor sentiment? Are digital assets slowly carving out a sanctuary amidst the turbulence of conventional equities?
It's a huge question. And, at this point, I'd like to take a moment to reflect on another essential thread woven throughout today's market narrative, a hint of humor in the face of uncertainty. It's interesting. While tariffs and trade wars make for stern headlines, sometimes it feels like these moves have more in common with a game of high-stakes poker.
Totally. Global leaders taking dramatic swings as though they're playing a hand of blackjack. And sometimes it's a royal flush of rhetoric.
Exactly. Now, number 5. Global implications of tariff policies. These aren't just domestic. They resonate globally. European markets are keenly watching, preparing for potential countermeasures. And there's concern in Asia, too, where supply chains are intricately linked.
That interconnectivity means any tariff shock in one part of the world could ripple into unexpected sectors, affecting everything. The global economic chessboard has many players, and today's moves might well be a mid-game gambit that influences trade relationships for months to come.
It's true. And that leads us to market momentum versus risk in tech. While tariffs threaten to shake up the tech sector, there's a balancing act. Tech stocks, as reflected in the Nasdaq's upward movement, still show resilience thanks to strong earnings.
Yet, the potential impact of higher tariffs on major players like Apple could really test that resilience. It's a scenario where growth and risk collide. Investors need to weigh future profitability against rising geopolitical tensions. It's almost like deciding whether to invest in a new smartphone with a promising camera. You want the best picture, but you also worry about the battery life in this unpredictable climate.
Perfect analogy, and the energy sector outlook amid market uncertainties. While our primary headlines today focus on tariffs and tech, the energy sector is quietly feeling the pressure. It's experienced bouts of volatility as investors try to gauge how trade policies might shift.
Yeah, predicting energy prices is like trying to predict the weather. One minute you're basking in clear skies, and the next, a sudden downpour has you scrambling for an umbrella.
So true. And the finance sector's perspective? Financial institutions are carefully watching, particularly as interest rates and macroeconomic indicators are at crucial junctures. Hefty tariffs could impact cross-border transactions and banking operations.
Banks and financial services firms may have to adjust their models based on new risks. It's in these moments that a diversified approach becomes not just smart, but essential. It's almost as if the finance sector is saying, even if the world goes mad with tariffs, we've got the hedge funds on speed dial.
Exactly. Now, number 9. Impact on investors' portfolios. For many, it's a balancing act between seizing opportunities and safeguarding against risks. Diversification across sectors becomes key. Are our investment baskets balanced enough to absorb sudden shocks?
And finally, crypto's dual narrative. Circling back to Bitcoin and Ethereum. Amid geopolitical and economic headwinds, the crypto market seems to be dancing to its own rhythm. The divergence raises pertinent questions about investor psychology.
Is this rally in Bitcoin a precursor to broader acceptance of digital assets, or simply a temporary flight to a riskier lane as traditional markets momentarily lose their luster? It's like while stocks are wobbling, crypto is embracing unpredictability like a cat chasing its tail. A little wild, a bit unpredictable, but undeniably fascinating.
It really is. Having covered these stories, it's clear today's market is a mosaic of contrasting themes. Traditional equities and emerging assets like Bitcoin and Ethereum are sending their own signals. This brings us neatly into our detailed sector analysis.
In the tech sector, tension is building. Apple, as a bellwether, is at the forefront of these tariff threats. If implemented, it could prompt a chain reaction across supply chains globally. Imagine manufacturing suddenly repriced, causing a ripple effect, even driving innovation and local production.
On a lighter note, it might even result in the unexpected emergence of do-it-yourself iPhone repair tutorials as consumers look for ways to maximize the lifespan of their current devices. Either way, investors need to monitor how tech companies adjust their strategies.
Haha, that's a good point. Turning to energy, although not directly implicated by tariff news, the industry finds itself navigating choppy waters amid concerns over international trade disruptions. Energy prices are always sensitive to shifts in global demand.
Yeah, any trade policy shakeup can send energy stocks oscillating. Smart money's tuned to central bank policies and global demand forecasts. It's like trying to predict the weather. 1 minute clear skies, next a downpour.
So true. In finance, the ripples are also palpable. Banks, in particular, are bracing for potential adjustments in international operations as cross-border trade faces new uncertainties. Increasing regulatory scrutiny means financial institutions may need to adopt more conservative models until the dust settles.
It's a reminder that in finance, agility and strategic foresight can often be the difference between riding a bull market and getting bucked off by volatility. Beyond these sector-specific insights, there's the broader canvas of global market implications. The interplay between American tariff policies and responses from key trade partners cannot be overstated.
European markets especially have been rattled by the prospect of a 50% tariff. In Asia, firms relying on complex supply chains are reevaluating investments. These changes underscore how interconnected our world is. A policy move in Washington can have resonating effects from Berlin to Beijing.
That global connectivity brings us to some expert insights. Many are questioning if current tariff threats are part of a larger strategy to reconfigure global supply chains. Is it a deliberate effort to bolster domestic manufacturing or just a temporary reaction to political pressures?
There's also a debate on whether alternative trading relationships might emerge as companies seek to mitigate risk. This is where investor strategy gets fascinating. Balancing domestic growth with international exposure. It's a bit like choosing between a local diner and a Michelin-starred restaurant. Both have unique flavors, but one might suddenly become more attractive.
Haha, that's a great way to put it. Some analysts predict that if these moves continue, we might witness a short-term restructuring of portfolios toward sectors less vulnerable to geopolitical swings. Others believe such dramatic policy stunts can be catalysts for innovation.
It's an intriguing dynamic. The best-laid plans sometimes get the unexpected twist. And I'd be remiss not to ask you, our listeners, a few thought-provoking questions. Have you begun rebalancing your portfolios in response to new trade policies, or are you holding steady?
And while Bitcoin's rally presents a captivating divergence, what does that signal for long-term risk management? These questions challenge our conventional wisdom and invite us to think creatively about navigating these turbulent times.
Now, before we wrap up, I want to highlight another interesting dynamic. Investor behavior often mirrors the moods of political leaders. With President Trump's tariff announcements and bold messaging, market sentiment seems to be oscillating between cautious optimism and strategic repositioning.
In a way, it's a reminder that both politics and finance share a stage where narrative and action carry equal weight. It's that blend of policy-driven headlines and technical market analysis that makes our daily job so riveting. Every day writes a new chapter of unexpected plot twists and cliffhangers, doesn't it?
It really does. So let's recap some key takeaways as we head toward our conclusion. Traditional equity indexes, from the S&P 500 to the Dow and Nasdaq, are showing moderate gains today, despite some underlying volatility.
Meanwhile, cryptocurrencies like Bitcoin and Ethereum are experiencing notable downswings, a counterpoint to traditional market stability. The looming threat of significant tariffs, particularly on European goods and Apple products, brings an element of uncertainty that could have cascading effects across multiple sectors.
And despite these challenges, sectors like tech, energy, and finance are adapting to navigate the risks, while investors are being urged to maintain diversification and stay alert to global market shifts.
As we wrap up, let me leave you with a few final thoughts. The interplay between global trade policies and market dynamics never ceases to remind us that in finance, certainty is a luxury. We have to weigh each decision carefully, balancing potential growth against the inherent risks of an ever-changing policy landscape.
It's a bit like being on a roller coaster. There are moments of exhilaration, a touch of fear, and plenty of opportunities to scream, laugh, and then get back in the seat for the next ride.
Absolutely! And I'd like to give a quick shout out to PantheonAI, your information co-pilot. Our goal is to arm you with the insights you need to make informed decisions, while adding a dash of humor and candid commentary along the way.
As you reflect on today's market landscape, consider what this evolving trade environment means for your investment strategy. Are you prepared for a potential shift in global supply chains? Have you diversified your holdings to protect yourself against geopolitical shocks?
And most importantly, how are you planning to capitalize on opportunities that may arise from market unpredictability versus those that simply keep you up at night?
It's been an enlightening conversation today, and while we've covered a lot of ground, from major tariff threats to the divergence between traditional markets and digital assets, remember that this is just one chapter in the ongoing story of global finance.
I encourage you to engage with our AI Copilot for further questions, deeper analysis, and that extra bit of clarity when the markets start speaking in riddles.
Thank you for joining us on the PAI Morning Briefing this morning. I look forward to engaging with you again tomorrow as we continue to untangle the fascinating web of market trends, geopolitical shifts, and sector-specific narratives that shape our economic landscape.
Remember, learning shouldn't feel like a full-time job. Until next time, stay curious, stay diversified, and always keep an eye on that next big opportunity. Pantheon AI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.